Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli, along with my twin sister, it looks like.
It does look like that. I'm going as Dan today.
You're going as Dan because you had Dan Ives.
Exactly.
Dan
So we had two Dans in the studio today, which is a first.
Yes, indeed. Well, not often. I think I'm getting two Jules tomorrow. Julia Lee's going to join me. But let's get to today and the market having a bit of a positive session, of course, on the back of those gains we saw on overseas markets. Europe hitting a record. We're up 0.4% on the CBO 200.
Absolutely. So good result there, and the ASX 200 at this stage, before the final trades go through, up around 26 points, or also just over 0.3%. So we'll take the green on screen, Jules.
We absolutely will. And we were talking about, these cuts being confirmed, really the key theme of the day, which has really dominated investor sentiment today. Rates going down in 2024. Powell confirming that in his testimony on the Hill.
Absolutely. It's more a case of just waiting for more inflation reads Powell wants to see, because they're very cautious about not lowering rates too soon, too quickly, and then of course inflation bubbling up. But look at CBA closing at $119 at the moment. That is a record, and we're actually seeing National Australia Bank also reaching a post-GFC high. So really interesting, Jules. Nobody likes Commonwealth Bank. They all have a pretty much neutral to sell on it, and yet this stock just keeps going up.
Yeah, indeed. Let's have a look as well in terms of some of these dividend bonanzas. We had BHP, RIO, South 32, all trading without rights to their dividend today. So, of course, all that money is going to flood people's wallets if they're not doing the dividend reinvestment plan, and potentially go back into the market and lift us again.
Exactly. It's just worth highlighting, because with so many stocks going ex-dividend and the index still being up, but just so it is absorbing it. I was reading some interesting research from CommSec on the reporting season, and even though profits were down 35% for this season, but of course a lot of that is sitting in the big miners, but dividends were only down 2%, so that's actually quite a good performance. So you're absolutely right, Jules, watching to see if some of those dividends are recycled back into the market.
All right, we're just going to quickly run through some of the sectors of the day. Energy certainly underperformed today, while tech outperformed. Beach, Origin and Ampol though looking okay.
And let's have a look now at utilities. Yes, there we go. A bit of green on screen there with APA, Meridian Energy and Genesis. So they were all trading higher.
And we are also looking at the miners. BHP, RIO, we mentioned ex-div. So was South 32, but it rose. Fortescue doing quite well, getting back towards those records.
And in terms of top corporate stories, let's have a look there. Now, the corporate regulator has slapped ASX Limited with a $1.1 million penalty over alleged breaches of pre-trade transparency rules following an investigation into an infringement notice issued to the market operator. Interesting, those shares actually trading higher.
And Ingham's Group plans to acquire New Zealand-based Bostock Brothers for 35.3 million New Zealand dollars. Its shares rose by about 2%, the deal to be funded through existing debt facilities.
And looking at further M&A, Southern Cross Austereo has rejected a takeover offer from A&R Media and private equity firm Anchorage Partners, saying it undervalues the company, and A&R and Anchorage had offered 0.753 A&R shares for each Southern Cross share, plus 29.6 cents in cash and 12.7 cents in franking credits.
Or as I said in simple terms, $225 million offer. They said, no thanks, we want more than that. All right, let's get to Deanna Messina, Senior Economist at AMP, who joins us on the COB ahead of International Women's Day. Great to have three women here. Deanna, I want to get into your piece a little later about some of the data you've done surrounding women in the workforce. But let's start with yesterday's GDP print, because I noticed your colleague Shane put out an article saying, look, that's actually the weakest growth we've seen when you strip out the pandemic since 2000.
Afternoon, ladies. Great to be on with you. I mean, it was in some ways the GDP figures, I think if you look in the detail, actually looked a little bit better from the consumer point of view, especially from incomes, because consumer incomes edged up a little bit. There were more payments for public sector wages related to the referendum. There was less of a drag on incomes from income tax payable from mortgages and also from inflation. So even though in headline terms annual growth looks pretty terrible, as you can see on that chart, I think some of the components actually looked a bit better, whereas it was kind of the other way around last quarter where the consumer looked incredibly weak. So, I mean, the data was completely in line with the RBA's own forecast of 1.5% growth over the year to December of 2023. I don't really think it changes the story for the RBA's meeting in March. I guess it does risk our own view that the RBA is going to start cutting interest rates by June, because that's only really in 3 meetings' time. I don't know if the data is slowing enough for the RBA to consider it a June cut. I mean, they're certainly not thinking about rate cuts right now. So the risk is that we see those rate cuts into the second half of the year, which kind of seems to be where other global central banks are placing the emphasis on the risk of rate cuts right now.
Interesting, Diana. So if anything, it's actually pushed out your rate cut expectations. Anything overnight from Chairman Powell in terms of the change in narrative about when they're looking to cut?
Well, in some ways, it's quite similar in the US where, I mean, the data's actually been a bit mixed in the past week. Like the ISM services was a bit softer, but then on the other hand, the job market is mostly still holding on to those gains. The quits rate did go down in the overnight data, which has historically been a good guide to labour market indicators. And I put out a piece on the US labour market the other day about how the forward-looking indicators of employment have all slowed. So the unemployment rate is certainly likely to increase from here. But again, it doesn't appear like the Fed's in a rush right now to cut interest rates. The economy is not falling into a hole. Inflation still has a bit further to moderate. So unless you really are going to see a negative shock, there's not really the need right now for policy support via interest rate cuts. They do have room to wait.
They certainly are confirming, though, as we know, that we will see cuts in 2024. What do you think the ECB is going to do?
Well, in my mind, Europe is the place that needs more support from monetary policy. Eurozone retail data is not very good. Wages growth has slowed. Some countries in the Eurozone, like Germany, are in a recession, and Germany is obviously the largest country in the Eurozone, and the flows from Germany kind of have a big impact to other parts of the Eurozone. So if anything, the ECB probably needs to be the one that starts cutting interest rates sooner, but that doesn't appear to be how the ECB is thinking about things. So they're probably waiting for inflation to slow even more, but inflation looks better in Europe than it does in countries like Australia or the US. So I think that they should be cutting rates sooner rather than later.
Diana, you did a great piece for tomorrow, International Women's Day, and I just couldn't help but really resonate when it talks about women in the Australian labour market. We actually don't fare too badly, but the main reason that women don't go back to work or are not available are caring for children. And I just personally have to put my hand up for that one. I was divorced, and it was such a terrible trade-off, Diana, because if I went back to work back into finance, I'd work so hard I'd never see my son. So I made the decision to look after him, which then of course changes the whole career dynamics, etc., etc.
And your super balance.
Yeah, well, many things. Diana, is this a function of just childcare being still too unaffordable in Australia, where women have to face this really challenging thing of either not being around for their kids or trying to do it all? It's a really hard question. And I mean, when you look at the data, half of women, or nearly half of women, work part-time, and the majority of the reason for why they work part-time and they may want to do more hours is because they're caring for children. But actually, when the ABS asked the women who were caring for children, or said that childcare was the biggest issue to them not being able to work more hours, the largest proportion of people said that they actually preferred to look after their children. So I think that there are obviously different circumstances that are going on. Some people who take time off work when they have children want to be with them. Some people, childcare is not available in their area. The cost of childcare was actually the fifth reason for why women couldn't work more hours. So it's not the number one issue, but I still think that there are 4 main things that we need to do in Australia better to bridge the gap for gender equality from a financial point of view. Number 1 is to constantly work on those unconscious biases in the workplace.
to ask women who are working part-time whether they want to be potentially working full-time, to give people on maternity leave promotions and bonuses even though they've been on maternity leave, to think about inviting women to things like golf days or those more normally male type of events that women can sometimes not be invited to. Secondly, the government policies around parental leave need to be widened. The Labor government has done a good job in improving those from this year, and also the announcement today about paying super for parental leave. But the countries that do the best on not narrowing the gender pay gap are the ones that have very generous paid parental leave policies. Society needs to... Sorry, Juliet.
No, you continue. I'm just curious as well when this gap potentially narrows.
Well, to be honest with you, I don't know if the gap will ever narrow if women decide to keep making the decision to have children, because at the end of the day, they are the ones that bear the children and birth the children. And that comes with a physical sacrifice. So there can definitely be a bridging of the gap between equal pay for equal work that still needs to be addressed, because there are still unconscious biases in the workplace. But if women continue to take time out of the workforce to have children, which I assume that they will still want to do even if it's for a short amount of time, you may never completely close that gap between part-time and full-time employment. That's not a problem if that's the decision that's made by women. But as long as you have the complete information when you're making that decision and you have the opportunity to potentially work full-time if you want to, that's kind of the main thing in trying to bridge the gap between gender equality, I think.
Diana, always a pleasure, and happy International Women's Day to you for tomorrow and every day, of course. Diana Messina, Senior Economist at AMP, Deputy Chief Economist, I believe, at AMP. All right, the stock of the day, Danny. It was Koshi's birthday, wasn't it? And
it sure was.
We had the stock of the day drum roll.
Santos, yes. And, I'm just trying to think who the guest was.
Howard was there.
Howard and Josh Barker, I think. So let's check in and see what they had to say.
It's not one that we like based on sort of management and fundamentals. Woodside yield is a lot higher. Last 12 months, its shareholder return has significantly outperformed Santos over the last couple of years as well. So we just think, I think it's a better player. Obviously, the merger was interesting. It's like, okay, well, there's only going to be one now, so we're not as negative on Santos because it's going to become Woodside, and that. Right. But now that that's not going ahead, no sort of reason. We'd just rather stick with our Woodside holding. Ex-dividend today, really nice dividend. A lot of question marks over Santos's dividend policy as well.
Right. Okay. So an avoid on Santos.
Avoid for Santos. Yeah.
Howard.
Yeah, we're never very enthusiastic about these hugely capital-intensive businesses, which Santos is. I mean, we talk about it being a multi-billion-dollar project, but they're going to be spending multi-billions of dollars first before they're going to be getting multi-billions of dollars later, if they get them later. And that's the problem with companies like this. And if you look at its last 10 years, its average return on equity has probably been somewhere around about, looking across here, 5-6%. You can't make a lot of money out of owning a company that has a return on equity of 5%. That sets an upper limit to what you as a shareholder can really get in the long term. So we're not enthused.
All right, let's take a look at the after close leaders. The market has closed for the day. Chalice Mining doing well, up 9.5%, along with Perseus Mining, quite the mining theme there with Illumina too. ResMed looking quite good in the healthcare space, and Megaport had a gain of over 5%.
And some of the laggards in today's trade. Helia Group off 13%, Helix about 3.5%, Woodside just under 3%, as was Rio Tinto and Ramelius. But remember, stocks going ex-dividend.
And looking at the small end of town, the winners were Agosi Minerals with a nice 22.5% gain. Appen, Amoro International, so the A is very much dominating, 29 Metals Limited and Race Oncology. And
the laggards in the smalls, what have we got? Drone Shield, well, that was very, very strong after the results, off 14%. And looking at Pengana Capital, off by almost 12%, IDOM off about 11%, and Servcorp off by about 8%.
Well, as we mentioned with Diana, the ECB very much in focus. It will hand down its interest rate decision tonight. We've also got jobless claims data in the US, trade balance and consumer credit. And Jay Powell continues chatting on the Hill.
Absolutely. And in Australia tomorrow, it's going to be a happy Friday. And we have earnings. Boss Energy, Core Lithium goes ex-dividend, as does Insignia, Westpac and Nine Entertainment. But we don't actually have much going on in Australia tomorrow, so we'll be taking our lead from overseas.
We will. You won't be here, sadly, but it will
I will
be
in the afternoon.
Oh.
Yes, someone's leaving us, so I'm coming for a party.
Yes, that's sad. We've got our
sad.
executive producer. Anyway, today it is about the market. I'm refusing to go there. The market did have a gain. Of course, the IT sector is looking quite good. As we mentioned, energy under pressure. 0.4% on the CBO 200.
Absolutely, ASX 200 closing up 30 points, almost 0.4%. And have a quick look. It's interesting to see the Aussie dollar's actually been quite strong again, currently trading at around 65.82 cents. So very interesting to see the changing momentum as people look towards the US and now cutting rates again before Australia. It keeps flip-flopping around.
It does indeed. All right, we will be back tomorrow from 9:40 Eastern. Of course, a lot of interviews to catch up with, including your fabulous interview, Dan Ives from Wedbush and Danny Akuya. You can find all that at ausbiz.com.au.
Have a great evening.
Good night.